And at the outset, my heartiest congratulations to VRF and Ankit for putting this together. I think ever since we heard at the G20 summit about the IMEC, there's been a lot of excitement, but to get it on the ground and actually get so many of us excited about it, I think congratulations to Ankit and to VRF for getting it center stage. So IMEC, we just got started about it. I think I just want to make a few notes before we get the panelists in and we learn from the wealth of experience that they have and their views. I think three things I want to talk about. The first thing really is that in a world which clearly is disrupting, where we do not know as to what comes next, how trade relationships, supply chains will be in a little while, IMEC is something which deserves a lot of focus, lot of attention. We are already talking about a world which is moving away from multilateralism to maybe bilateralism. We don't know yet. We don't know yet. There yet may be a thaw. But in these times, we also have countries. India, of course, as many of you know, is looking to do a bunch of FTAs at this point in time that could cause India's trade balance and India's trade partnerships to change in the near future from what they are currently, because of what we have been hearing. Of course, the tariffs are a case in point. But even before the tariffs came in, India was looking at doing a bunch of FTAs, and it's absolutely right. I mean, every country will try and explore new trade corridors, new avenues for them to make sure that the competitive advantage that they have comes to fore in their relationships with their partners and the world that they combine themselves with. Why the IMEC is important, and I think I do want to talk a little bit about that, is because of some very unique features that the three broad components of the IMEC bring together. Now, India, which of course we know is rich in natural resources, has a demographic dividend and a vision to become, of course, the manufacturing powerhouse of the world. From India's standpoint, what does India offer? India offers scale, speed, and of course, supply side potential. Then we go to the Middle East, which of course has been successfully diversifying its economy away from oil. Of course, oil remains a bedrock, but away from oil, and has ambitious projects to become a business center. Along with India, one of the largest startup ecosystems is also there in the Middle East. Thank you. And of course, Europe, which brings know-how, institutional expertise, capital, and potentially best-in-class manufacturing techniques, particularly in countries like Germany and others. Its strong regulatory framework and innovative ecosystem, of course, provides an anchor for this grouping for trust-based trade and technology alliance. So from that standpoint, if we look at the potential for IMEC, we were thinking about IMEC and we thought, let's come up with a four-point framework which might bring the potential of IMEC to life and which may get it going at a pace and a clip which is faster than what many of us would otherwise expect. So IMEC, the first one, institutional alignment, and I think that's absolutely critical to make sure that IMEC actually leverages to the potential that it has. It is very important that each of the participating nations feel that they have a governance structure and an enabling infrastructure to make the potential of IMEC come to life. And in that restrictions, it's very important that there are bodies which are set up which will take away trade frictions, will make sure that the intersections are seamless, and in some ways help in fostering and building transparency and gaining support for corridor initiatives, which in any case takes time. When we are looking at doing any changes in the way you want to enable business, change management is always tough, and some of these institutional alignments will help in building trust and making sure that various constituents, both in the private sector and the public sector, are able to drive that at pace. The M stands for multimodal transport development, and I think that's extremely, extremely critical. We already have some exemplars of that. If you look at the South Asian Sub-Regional Economic Cooperation, that is one. But it is extremely important that these transport networks that will get formed pursuant to the IMEC, they cause seamless linkages so that we can minimize delays and optimally use resources, which are always scarce, to enhance reliability, management and synchronization of various supply chains. And from that standpoint, I have to say that India and UAE have already been on the path. UAE in particular, if you look at it, they have taken the first step to facilitate trade and reduce administrative processes, logistics and transport costs. And last year, we did, together with UAE, set up a virtual trade corridor and launched the Maitri framework, which is to digitize trade documentation, reduce processing time, optimize trade flows, and contribute to sustainable development. The E, of course, always stands for ease of doing business. I think that's extremely, extremely critical, because when we look at even individually, I think that's something that we are on the path of, and now we are trying to do we're trying to go all the way to Europe, possibly even more so. Integration of custom procedures across the corridor so that we feel that there is lesser bureaucracy and there is promotion of flow of goods and services would again be extremely critical. There is obviously going to be a need to explore mutual pre-clearance systems to help simplify customs and regulatory procedures and facilitating efficient cross-border business operations. The one part which I will of course want to speak about is also a dispute resolution mechanism, which I think will be extremely critical for IMEC again to work at pace. And then the C, of course, this corridor will require a huge amount of capital deployment. So the C obviously speaks about capital mobilization, and while there will be a lot of anticipation that there will be multilateral agencies like the IMF and ADB which will have to be which can support. There is also, and I'm very encouraged by what our Minister for Commerce and Industry said, Mr. Piyush Goyal said some time back when he spoke about the potential for IMEC bonds as a mechanism to raise capital to get the lever to this platform. Of course, I have to say that in a world which has been multipolar and which is in transition, as global supply chains shift, nations will continue to rebalance between efficiency and resilience. In our minds, IMEC is going to be the harbinger of this shift, could be a harbinger of this shift. And while globalization 1.0 may have been based on cost arbitrage or largely on cost arbitrage, a globalization 2.0 based on trust, leveraging technology, can create more sustainable outcomes, and IMEC could be the harbinger of that. Let me just say that as I end, that if I look at the government data themselves, what the government data tells us is that if we enable IMEC in the way it should, it will, one, of course, create alternative supply chains and supply routes, but also the 6,400-kilometer proposed rail and sea routes will indeed reduce transportation time by 40%, reduce logistics costs by up to 30%, and of course, will help increasing the share of global trade for the country by up to 5%. So sitting in India, I think there is increasingly more reasons for us to be sanguine and optimistic about IMEC, and I'm pretty certain that our panelists here will share the same view, but also will be critical and provide their insights as to what will cause IMEC to be a success. So maybe I'll join the panelists now and get their insights as well. Welcome. Wonderful to have PwC alum on stage. So let me get started on the first one first, and maybe Stephen, maybe we start with where we left off. IMEC, we talked about capital mobilization, and today you are enabling capital for a bunch of businesses. How would you look at IMEC as a concept if you were to fund it or any constituent of it, and what recommendations would you have if this were to be a success?
Well, thank you very much, Sanjeev, and good morning to all of you. A pleasure to be here. I'm impressed that you knew that I was PwC alumni. That was going back quite a number of years, even before I was in politics. So that's good history there. Look, I think we live, and this is going to be a cliche, and people have heard it numerous times, but we currently live in a time where we are seeing a change in the global economic order. And I'm not making reference there to the way in which the great power competition between the US, China, and to a certain extent India are competing. I'm speaking more about the way in which the world is addressing the needs and the trade routes and the supply chains. The disruption to supply chain has been profound. That was really started to some extent pre-COVID, accelerated during COVID, and now continuing to accelerate under the second Trump administration. So that reshoring that's taking place, the way in which global trade flows are being disrupted, all of that is, depending on your perspective, either an opportunity or a threat. For an organisation like IMEC, for an initiative like IMEC, I think this presents tremendous potential. And the critical aspect will be the way in which governments are able to harness this disruption to provide the kinds of efficiencies that you were speaking of. Now, India has had for a long time a significant level of ambition around free trade agreements. The Regional Comprehensive Economic Partnership, or RCEP as it's called, was in many respects the cherry on the top of global ambition about what could be achieved, and it in many respects partnered the work that was done under the Comprehensive and Progressive Trans-Pacific Partnership. Now, together with what I call, and others have referred to, the geopolitical swing states of the UAE, Saudi, there's an opportunity for India, for the Middle East, to be able to craft out for themselves a unique position to be at the very epicenter of those global trade flows. Now, reshoring is happening. We're seeing a focus of capital driving back to the United States, but that is going to create tremendous opportunities across each of these economies. And I think that as we see linkages and opportunities for growth between Asia and Europe and all of the geography in between the two, then that's tremendous opportunity for governments to crystallise on that opportunity. So to your question about, well, how do you actually drive private capital, and I guess to a lesser extent public capital into those opportunities, I'm not sure it actually changes all that much. The fact is that for private capital, decisions about allocation, whether it's in the United States or Europe or the Middle East or India, are still coming down to fundamental considerations around what does my return profile look like, what does my risk profile look like, and how do I make sure that this deal is underwritten in a way that I can live with the degree of risk to be able to allocate capital to that opportunity. So the tailwinds that are attractive are to say, look, I can be investing in a logistics hub or a port or whatever it may be. I can be investing in this and capitalising on those tailwinds. But fundamentally, unless you have the right risk profile, it's going to fall away because decisions will be made to say, look, I can generate a 14% return by investing here, but maybe I can go and invest in Texas and get a 15% return and feel more confident that I'm not going to have my money at risk. And so I think addressing that issue of risk remains always the most fundamental aspect. So the tailwinds are there, but you can't move away from the fundamentals of any opportunity, which is to get your risk profile correct.
Very quick follow-on. Do you think it's too ambitious, considering a lot of it is greenfield? Do you think it's too ambitious?
I don't think it's too ambitious. I mean, people would say, I mean, you want to talk about ambition, people would talk about, in particular, the UAE 10 years ago and some of the dreams and ambitions that the UAE was announcing then, and would have said that's too ambitious, but they've delivered on it. So I certainly don't think it's too ambitious. The key is, I said, you've got to marry ambition with fundamentals.
So Alok, let me come to you. You've, of course, been part of many large capital deployment. And, whenever there is significant amount of capital deployment, as, of course, IMEC will require, there has to be a safety net, there has to be regulatory security, there has to be policy security, and so on and so forth. If IMEC is to be a success, what would your recommendations be, both from a policy standpoint and something which will enable you to put your capital at work for the opportunity that it causes?
Those are both tough questions, Sanjeev. So, firstly, good morning to everybody. I'm also here a little bit in my personal capacity. I'm not going to talk about Reliance's investment aspirations, so just to get that out. I think this is an idea which is long overdue in one sense, because as we said, 10 years ago, the world looked very different. And there was flow of capital, there were supply chains, and there were economic alliances. Today, they all look either broken or very different. But I'm also a bit old-fashioned to think that, in 10 years from now, we'll look back and say that, alliances actually work. The trick is, will there be the right supply chains to get the economic integration back? Everybody will do their onshoring, everybody will invite capital back, but it will not be a group of individual islands economically, even at any point in the near future. So, capital, like goods and services, finds its own level and flows where it meets the least resistance and the best outcomes. So, I'm a big believer that over time, a good idea based on sound logic will find its capital. So the best way to think about it is to take, I hope, a couple of projects that we all can relate to, get them done, get them funded, and then use those as templates for increasing ambition over a period of time. We need a couple of early successes to build on them. That's the only way I think about it, but I think we are in difficult times, always, all of us get up imagining the worst every morning, and I think that's just a bit of overreaction to all the headlines that come overnight.
So I think early successes, I think Alok, you mentioned the point about early success is important for this one, and I completely agree. So Dr. Ahmed, Safty, if I can come to you, one could look at the whole IMEC proposal as, let's say, a logistics pipeline, if I may call it so. But it is much broader. It is about people, and as we heard Mr. Singh also say a little while earlier, it's not just about trade, it's also about people connecting, and there is innovation, the possibility for innovation. And then as a result of that, when, you know, as they say, when hearts meet, the heads can work better. What do you think is the possibility for IMEC, and how is it that the Gulf states can enable it?
First, good morning, and I'm being honored to be here with you in the great city of Mumbai. This is my first time in Mumbai, so I'm enjoying the city too. About the Gulf states, I'm going to talk about the UAE experience here, okay? First of all, if you look at UAE right now, the GDP is around like 75% man-oil. They were agile, they were flexible, pragmatic, and forward-looking for a long period of time. This is how things developed right now for the UAE. So for UAE, for example, they are focusing on the future. Okay, they are focusing on diversifying into the areas of the future, including technology, for example. IMEC represent a golden opportunity for the GCC in general, UAE in specific, in this regard. If you think about how much the UAE is investing in AI, for example, the UAE is investing huge amount of money on all the supply chain of the AI. They have, starting from the chips, they have the foundries in the US, global foundries. They are in talk with TSMC and Samsung for building chips in UAE. They have initiatives with Microsoft, and they are part of the Stargate project in the US. And the purpose is not only UAE, it's about regional provision of AI services. They are looking for Africa. They have a project, a joint project with Microsoft in Africa, in Kenya. They are looking for markets including Central Asia. And when you think about IMEC as a sort of multifaceted project, it's not only a sort of transportation route. It has energy, it has electricity connectivity, it has digital connectivity, which is very important. And if you think about the different parties inside the project, have all sorts of resources related to this. You have the innovation, you have the technology, you have the skilled labor, you have the financial resources, which all are very important for this. So in this sense, IMEC makes a really good sense for UAE in practical terms. One important thing is that we see lots of uncertainty, as you mentioned, around what's going on right now. But I think from my point of view is that whatever the results, there are one certain result, is that you have to do diversification. Diversification in trading routes, in partners, in all sorts of economic activities, including supply chains. And IMEC is in the center of all of this. IMEC countries are very practical. They can talk to everyone. They don't have to take sides, which is very important. And at the same time, you have integration across the corridor itself. If you think about the resources, if you think about how they could be integrated. So in this sense, I think IMEC is very critical for UAE, especially with the forward-looking approach and practicality. I would like to bring attention to one of the major tools for UAE dealing in trade and economic relations outside, which is CEPA. CEPA is the Comprehensive Economic Partnership Agreements. The UAE has 27 agreements right now, talking with around like 40 countries, including countries within the IMEC. So you have CEPA agreement with India, you have CEPA agreement with Israel, and at the same time, if you look down, they have CEPA agreement with Indonesia, Malaysia, and New Zealand. All those agreements shows sort of practicality in approach. It's not only trade agreements, it's comprehensive economic agreements. It's tailor-made for each country based on practicality, based on mutual interest, and this is how it works. So for UAE, I think the major thing, and I'm talking about UAE specifically, but you can generalize for the whole GCC countries. They are looking for diversification, they know what sort of resources they have, they know their own power as middle powers, and they know countries with the same sort of approach and I think vision, prospects for the future. They are dealing in a very practical way, and this is why I think IMEC would fit well within their visions.
Thank you, thank you, Dr. Safty. So, Afaq, if I may come to you now, we have seen some other corridors as well. China's BRI is a case in point, and of course, we were talking much earlier in the previous session about some other routes, etc. Now, in the world that we live in today, from a geoeconomic standpoint, one, do you see IMEC, and we're trying to make a case for it. Do you see this succeeding in the way and at the pace at scale that we wish it to, considering we have certain other examples as well? And from your standpoint, what would be the key underpinning for its success?
I'll just spend a couple of minutes on BRI. So just so that we can put things in perspective and context, and then visualize IMEC through that. BRI is more than 10 years old initiative, around 150 countries part of it, backed and primarily funded by China. I think more than 1 trillion investments by 2024 have already been secured, and it has roadways, it has railways, it has seaports to which China then owns them up. We have ports in Pakistan and some ports in Europe as well. So that's the kind of scope that we are looking at when we are looking at BRI. IMEC, in comparison, has a very focused scope, which is as a corridor and which is looking at these limited countries at this point, and I'm sure there is a scope to enhance the scope of countries in IMEC. Having worked on connectivity and infrastructure, I see that scope of IMEC getting extended to other corridors as well. But when it comes to IMEC, I mean, right now it's just an idea. Talking about an idea which doesn't exist right now. We're all positive about it. Sanjeev talked about, are we being too ambitious? It's good to be ambitious, but at the same time, we need to work on the implementation of that ambition. 2-3 things that we need to look at from an economic perspective. We need to firstly look at what is the economic gain that the countries are going to get out of this. The geopolitics part of it is one thing. But what is the gain that these countries are going to get? We're talking about 40% shorter voyage and about 30% cheaper. I have my own questions on the cost aspect, because we're looking at multimodal transportation. The more the modes, the costlier it becomes. And we're looking at sea, rail, and sea. In practical terms, it gets challenging for the corridor. When rail is first and last mile connectivity, it makes an efficient sense. But when rail is in the middle of 2 ocean voyages, it really needs super efficient systems. In practical terms, when a container comes and a vessel, sorry, I'm going very, very practical into it, because I think we need to understand these practical elements, and then we can look at the larger picture of it. When a vessel with around 15,000-20,000 containers, that's what we're aiming for, Panama Max and big vessels going to the UAE port, 20,000 containers, they have to get onto a rail. And a rake would, 250 containers in one rake would go. So you need about 50 to 80 railway lines ready to move just one vessel cargo. Just imagine the level of infrastructure that is needed, and this is just one vessel. I'm just talking about one vessel. So that's the efficiency that we need. And you also have to keep in mind, at the end of the day, apart from other elements of IMEC, trade is one of the key elements of the business has to trade. It has to make business sense to a logistics player. It has to make business sense to an exporter, to an importer, to a shipping line, which are here to make business. So how do we manage that? How do we look at the cost efficiency? So you at one point you have to enhance the efficiency, at the same time you have to make it cheaper also. So those are some of the, I would not call that as a roadblock. These are not roadblock. That's how a corridor evolves. It's a natural process. But these are certain things we need to keep in mind, because somewhere in the overall narrative, we're getting lost in BRI versus IMEC. Let's not get lost in that. BRI has its own scope. BRI, I mean, if you look at the last few years, China's trade with BRI partners is more than 2 trillions, and which has grown around 15 to 20% by 2022. So they're making progress. Let's not get caught in narrative. Let's make progress. The China-Europe rail has already moved almost more than $400 billion of goods, more than 1 million TEUs. So they have been there for 10 years, but let's not get stuck in that narrative of BRI versus IMEC. Let's look at these implementation aspects of the corridor. And also another aspect is the trade. You talked about ease of doing business. The rule that we have to follow, goods get loaded in Mundra, they have to be cleared till Europe, wherever the last port. It has to be port to port clear. You cannot keep clearing and documentation at each leg in the corridor. That's the level of technology, that's the level of regulations we are working with. The railway lines, there's a lot of upgradation, there's a lot of harmonization of railway systems needed in GCC still. So these are some of the practical implementation aspects that we need to keep in mind when we are talking about IMEC. And if we really have to, if this idea has to really see light of the day, I think implementation-related aspects cannot be ignored.
Afaq, thank you so much. I think a dose of realism there, and clearly lots to do, as you clearly said, and we'll talk a little bit more about it. But Mukesh, let me just come to you now. You have been anchoring the US-India partnership for many, many years. And, it could be challenging, and I'm sure, you know it better than anyone else. We are here talking about many countries coming together to create one corridor with hopefully economic gains for everybody, not just on the trade route, but also, from a civilization perspective and so on and so forth. If you were to look back from all the experience that you have on anything which is bilateral, and now we're looking at multilateral, what would your suggestions be? Something that we must keep in mind as we try and bring this to life, IMEC to life.
We live in a world of, I call, whiplash tariff policy. And basically, what nations are saying that we have to look at alternative. And so we are seeing a balkanization of economic zones erupting in the next 10 years. And IMEC becomes one of those. When you look at IMEC, the combined GDP of IMEC countries is around $47 trillion. And a population base of around 2.3 billion people. When you look at the median age, Italy being the highest, around 49 years old, India being the youngest, which is around 29. And more important is when you look at the potential of this corridor, what we see is just on the infrastructure, roughly $600 billion opportunity of growth itself. And World Bank came up with a report saying that if IMEC country got together, they can accelerate the trade by 40% in the next decade itself. So this provides a tremendous opportunity for the US companies. When we look at the S&P 500 companies, they generate roughly $17 trillion in revenue. And 40% of that comes outside the US, roughly around $7 trillion. When you look at the IMEC countries, it comes to between $2.5 to $2.8 trillion revenue for these companies, and these are US companies itself. But more important is you have to look at is the cost of manufacturing for these US companies in the region will be 60% cheaper than having in the US. So it is in their interest to basically be part of this economic zone. And the way we are working, and we started working on this objective over a year ago. I'll give you a couple of examples as to how we see things moving forward. We met up with Raj Subramaniam, CEO of FedEx. They don't have ground services in Middle East. One of the key things they're going to do is start doing ground services in the Middle East itself. We met with Michael Maybach, CEO of MasterCard. And basically, they would like to set up a digital cybersecurity financial corridor among the IMEC countries, so you're able to move things in a safe manners. You look at India's UPI stack. That's a fantastic solution for the IMEC countries, so you're able to basically do execute cashless transaction and do it cross-border also. I know UA has already started using some part of UPI financial stack. And so, you know, we talked to ITC, which is an Indian hotel company, but also they are the largest food packaging company in India. And they're looking at as to how do you basically put a corridor of food supply chain in the IMEC corridor. So I think what we are seeing is that practical solutions coming out, both from Indian and the American companies, to bring in the right value proposition and leverage a growth story itself. So I think we are looking purely from an economic perspective, and IMEX provides that quite sufficiently, especially for the US companies.
So I think it's wonderful to hear from Mukesh that a bunch of American companies will have significant interest in IMEC, not just from a capital perspective, but hopefully also from leveraging the infrastructure which will get created. Stephen, if I may come to you, you've negotiated a bunch of FTAs for Australia over the years, and of course, you know, now this route we just spoke about what China has tried to do, etc. From Australia's standpoint, do you believe, like what Mukesh said, there's an ability for you to leverage this corridor a lot more?
For Australia to leverage the corridor? Look, I think, so there's two ways of answering this. And one is to view it from an Australian perspective, and then one is to view it from an IMEC perspective. From an Australian perspective, opportunities to be able to find additional export. I mean, Australia is still primarily heavily reliant on its exports of resources. Iron ore in particular, but also coal. We've seen some strong linkages between India and Australia. Mr. Adani, for example, was looking at building significant coal extraction. Those are industries that, you know, are more difficult in this day and age to receive capital allocations because they're not seen as being ESG friendly. But the point is that if you look at the primary exports from Australia, they are predominantly resource intensive, resource industry, and to a lesser extent agriculture. Now, Australia is a large agricultural exporter, but not by volume, by value. And Australia has a relatively unique position, along with New Zealand and a couple of others, of exporting some of the most premium food products globally. So I think that there's demand there, but I wouldn't, if I was an IMEC country, I wouldn't build a strategy around Australia, is I guess what I'm trying to say. Now let's flip that the other way around. And I was listening to your comments about the United States and others. I mean, in many respects, in my view, at this point in time, you're seeing this change in terms of allocation and supply chain, where increasingly you're seeing, for example, a lot of onshoring back to the United States. And it's unashamed US policy to say we want manufacturing back in the US. So if that is happening, where are we seeing movement? Well, I now live in Abu Dhabi, and I can see a consistent theme that is emerging, which is that there is a significant push, in particular by Chinese entities, to become truly, for lack of a better term, multinational. In order to try to escape some of the punitive tariffs that are being put in place, can we look at having a licensing regime, or can we look at doing some other kind of structure so that they're able to manufacture in other areas and avoid US tariffs if they're selling into that market. The quid pro quo is that if the US continues, with its policy of imposing tariff walls, do you see, for example, Europe doing the same thing? and the risk of going on a little bit too long. But I look at decisions around, for example, the automobile industry. Again, we're seeing BYD, we're seeing Chinese-made EVs really leapfrogging existing OEM, existing manufacturers. Now, from much of Europe, certainly throughout Germany, Slovakia, countries like that, you're talking 5, 6, 7% of contribution to their GDP coming from automobile manufacturing. Now, that's under significant pressure. So to me, it's logical, if I was to try to predict the actions of governments and of politicians, to me it's logical that if the US is imposing tariff barriers to protect their car industry, well then if you're a European industry facing the same pressures, wouldn't you do the same thing? So I think that you're going to start to see that, just because it's politically popular, you'll start to see some of these moves happen. So if you expect that there'll be increased tariff barriers across each of these jurisdictions, then for an initiative like IMEC, it creates as I said, it creates an opportunity to disrupt by saying, well, you know what, you can avoid some of these tariff barriers by, if you're Chinese, manufacturing in India or manufacturing in the GCC. If you're a European manufacturer and you want to find opportunities to get into Asia, you can do the same thing. And so, and bear in mind too, today, what is one of the single biggest advantages you can have? Energy security and cost of energy. And for India and for the Middle East, they have both energy security and a cost of energy advantage, much more so than the United States or Europe. So to me, the key drivers of a lot of these decisions are going to be economic drivers, as they always are. And that's why I go back to what I said at the very beginning, which is there are strong tailwinds there for these things to happen. What is lacking, in my view, at this point in time, is getting the right risk profile. Because I think if you solve for the risk profile, private capital will flow.
I think that's wonderful. At least we are certain, we're getting more certain about capital flows, of course, subject to conditions, which capital always is. Stephen, I'll come back to you with one specific point which you made a little later. But Dr. Safty, if I can come to you, you spoke about, the focus on innovation, and, technology can be a huge enabler. I mean, Mukesh just spoke about how UPI is being a huge enabler for the Indian economy, and now it's actually going global. What role do you see technology playing in IMEC coming together and possibly causing this regional cooperation and hopefully global solutions?
That's a very interesting question because, again, if you look about the members within the IMEC project, again, you have all the elements for success. You have the investment and the ambitions of UAE and the GCC in general. You have the innovation and the advancement of technology in Israel. So in this sense, sort of integration among those countries, along the IMEC project, could play a very important role globally, especially that you are in the center. So you can serve many areas around you. Okay, again, the projects in UAE, for example, it's not only for the GCC, it's including Africa and including Central Asia, for example. So this is very important to look at the resources, the requirements for advancement in technology, for the AI specifically. And you have all the elements aligned within the group of the IMEC project. Okay, this is very important. And at the same time, the basic thing is that technology is moving fast, okay? And from my point of view is that we should think practically about it. We should think about the parts that could be integrated together in order to lead in this race, okay? And I'm going to mention a quote that really strike a chord with me from the business community in UAE, okay? The quote I'm rephrasing is that UAE is in a Formula One race. And what the UAE is thinking is how to do the pit stops while you are moving, not stopping just to do the pit stops. You have to move, and you have to move fast. And this is what we see. Like if you think about technology right now, if you think about the AI, China, when they came up with DeepSeek, it was a sort of disruption to the market. We have to think about it this way. And how you can integrate this to take the lead. When you have all the resources, you have to move fast in a practical way. So I think this is one of the urgency of implementing IMEC, is to look at the benefits from an integrated approach towards technology, while you have all the elements available for the group.
That was very helpful, Dr. Safty. Afaq, if I can come to you, I think one of the things, if this is to be a success, then it's also going to be about people and how people think that this is accretive, of course, but also it is, inclusive. In some ways, it is causing equality, if I may. And there are a bunch of smaller nations, if I may, and it should not be at the expense of them. I should not feel that I've been taken advantage of. How do we cause many of those things to happen for IMEC success?
I mean, if you look at countries like Jordan, there are small countries part of this. I mean, there is India, which is a really big country in terms of trade volumes that come out of India. In this corridor, India is the cargo originator. The cargo originates from India as far as this corridor is concerned. And there are a couple of things that we need to keep in mind so that we don't run over the smaller countries, I mean, as big economies. I think the revenue sharing is going to be important when we are talking about the corridor. That modeling will be really important. How do we ensure that there is revenue sharing which flows into these smaller countries also, and they also have their interests in place. When railways would move, there would be transit fee for those countries, and I think that would be one, and other revenue sharing models will need to be looked into place. And transparency in those contracts, transparency in the infrastructure projects is going to be really critical. We have seen that with many of the infrastructural projects backed by China. There's a lack of transparency. So let's be clear on that yes, these are transparent infrastructure projects in terms of fundings, in terms of revenue models and everything. The other thing is, as I mentioned in my earlier remarks as well, we need to have that economic impact assessment in place for these countries. When a corridor passes through a country, it would lead to the development of that country. And would that development be driven or supported through technical support, through capacity building by these larger countries? Because a country like Jordan would need support to grow, to create those economic zones along this corridor. So that would be really important to delve deeper into these countries to make sure that economic benefits are given to them as well. They don't become the colonies of the bigger countries in the corridor. We should make sure that we don't get into that. And yet there is an economic spillover for all the countries which needs to be leveraged, and due share needs to be given to those countries as well. Primarily, I mean, I think the major source would be the revenue of transit, and then support industries that can come up, which can do the value addition to certain goods, which can be imported into those countries, some economic zones, and that's what China is doing, by the way. That's how they really integrate those countries into their whole value chain. Right. So we need to study that model.
Yeah, it ought to be inclusive, certainly.
Thanks.
Alok, if I can come to you, are there specific sectors which you believe can benefit through the IMEC, of course from an India standpoint, but also for the region? Specific sectors which you think can benefit?
There is already very strong trade ties in this corridor. So, energy sector is an obvious one, but then we don't need to dwell a lot more on that. And so I think the benefit of the corridor is just going to make sure, as we have talked about, is that this group gets closer together, the inefficiencies get out, and both trade and services flow seamlessly at a lower cost than it happens today. That's the only way that this idea is going to actually become a success, right?
Mukesh, you already spoke about the interest that US corporations would have in the region. I think from two standpoints, one of course capital, but the other one, we briefly spoke about that, technology as well, because for it to be efficient, for it to be inclusive, for it to cause the economic outcomes that we wish it to, I think technology also becomes extremely, extremely critical. What do you think is the best way to engage, nations like the US and others to leverage what they bring to make IMEC a success, to your mind?
Well, when you look at, you have one aspect of technology, and everybody's talking about AI, and I think when you look at it from algorithm perspective, US has massive algorithms, but it's missing the data, which basically comes from India with a massive population and transaction taking place. But more important is you have to understand that you have to figure out how we get these two working together. And we're working, especially with the companies like IBM and others who are coming into the market. And for example, they're leveraging the quantum computing. And if you look at big chunk of the product are being made in India. When you look at GCCs itself, we have roughly around 2,000 GCCs. 60% are US companies bringing a lot of technology and generating a lot of technology. Companies like Qualcomm, 50% of the IP is coming out of the GCCs in India itself. So I think it's important that we leverage US-India partnership from a technology perspective and take it in a cost-effective manner across the IMEC corridor. I think that's the right value proposition because any technology which is going to succeed in the corridor has to be cost-effective. The other factor is important to understand is Israel, where they are coming out with some very, very efficient and advanced technology, both in the financial sector, defense sector, cyber, and we are working with them on a corridor which is US, Israel, India. And we can basically take that also into IMEC corridor. So I think it's going to be important that any technology which we bring in, there's a value proposition for those companies. They're able to generate revenue, make fair profit, but more important, it has to be cost effective.
One final question which I'll ask all the panelists, and Alok, we'll start with you. If there is one policy, regulatory, governance matrix, just one, which you would like to think about, which you think we should all be cognizant of to make IMEC a success, what would that be? Just one.
Scope and what IMEC needs to achieve in the next 5 years needs to be very clearly articulated. I think policy and interventions will follow, but I think, as some of us have said, it's a great idea, but it's still early stage. So we need to really think about where we are going with this.
For me, practicality and flexibility. This is very important. Time is of essence here, okay? So just like having all this group of countries trying to seek a sort of an agreement on what should be done. It should be done quickly. It should be in a practical way and in a flexible way. Because again, I know that setting the ground, setting the basis that you can build IMEC is time consuming, but time is very precious now, and this is a golden opportunity for everyone.
Market opportunity is tremendous. Let the market forces drive the growth story. And it's important that when you see the cross-border transaction, remove the impediments as much as you can to make sure the economic growth story takes place.
Thanks, Mukesh.
I think the principle of mutual recognition. You don't need to have every system harmonized, but you need to have each system speak to each other. Doesn't matter what it is, whether it's trade licenses or whatever. Mutual recognition so that if you're registered in one jurisdiction, it washes over to the next.
Thank you. Thank you, panelists. I think we are just about out of time. Thank you so much for building the case for IMEC. Much to do ahead, but hopefully the session serves as an appetizer to what's ahead. Thank you.